Real estate investment practice problem using Excel. Amortization schedule loan amount changes, where we're going to focus in on changes in the loan amount, look at the impact to the payment and amortization schedule. Get ready because it's time to raise the stakes with real estate. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we have 3 tabs on down below: the example tab, the practice tab, the blank tab. Let's take a quick look at the example tab, in essence being an answer key. We're going to have the information on the left-hand side. Some of the information already populated will be the amortization table, which we have added a table for and a slicer for. If you want to know how to do that, take a look at prior presentations. This time, we're focusing in on changes in the home purchase, which will change the loan amount. And as we change the loan amount, the first thing we would think about is what's going to be the impact on the payments. So in other words, if we were to hold the period constant, 30 years, 360 months, and the rate constant, 5%, what would be the impact on the payment as we change the home purchase amount, which would change then the loan amount. Then we'll create a pivot table as we see on the right-hand side, and we'll do a little bit more in-depth analysis to think about, well, what would happen if I held the rate at the 5% and we changed the purchase price, and look at the impact on the interest payments and the impact on the loan balance. So a little bit more in-depth information we could pull from the pivot tables. All right, then the second tab, the practice tab, will have some of this stuff pre-formatted. So we have this nice little blue area which you could see where we're going to enter the data. Might be a little bit easier to work the problem than picking this up from scratch. And then on the blank tab, which is where we'll be working, we're going to just enter the new stuff from scratch. So it's not completely blank, but we don't have the pre-filled data. We're going to just populate the data as we go. It's going to be great. All right, so the home price, this is where we're going to be changing things up top. We've got the home value up top, which we're going to be adjusting. And then we've got the down payment. We're going to assume the down payment's going to be fixed at that 20%. And that means this is going to calculate automatically for the down payment, which is 20% of that $440 in this case. And then the loan amount then is going to be the $440 minus the $88,000 in this case. So this will all populate automatically as we basically enter the home value up top. That's where the focus will be. In essence, with our calculations of payments, we're focusing in on the loan amount right here, which is going to be derived directly from the home value because we're going to assume 20% is constant. Okay. Then the years are going to be 30 year. We're going to keep that constant, not changing the years. That's 360 periods. The rate we're also going to say is constant because we're focusing now on changes in the loan amount. Notice we still have the drop down that we saw in the last period on this neat little rate, so you could change the rate here, but we're keeping it at that 5%. The payment calculation is being calculated based on this data up above, and we still have that. This is your table where the rate changes are that are being calculated. The amortization table on the right is being calculated based on this data. Now we want to say, well, what would be the impact on the payments if we were to change basically the home value and then therefore the loan amount? And then can we basically attach this data to it so we can focus in on changing basically the home value and the loan amount. So we're going to do a similar little table. We'll also add this table as a drop-down item here as we have here. So we'll do a little drop-down thing to make it fancy. So we'll look forward to that. So we're going to say home costs. Home cost and the PMT. What's going to be the impact on the payment? Now, you could do a variation of this and just look at the loan amount versus the payment, but we're going to make it a little bit more tricky in that we're going to have the home cost and assume 20% down, which will calculate the loan payment, which will be 80% of the home cost. So let's go ahead and then select these two, go to the home tab. We're going to go to and make this our header format, black and white, center it. And then I'm going to put up some home costs. So we're just going to assume homes are costing. This is not the loan amount, but the actual home cost, $200,000. And then on the second one, I'm going to say this equals the one above it. Let's say plus 20,000. So we'll have 20,000 increvals as we go down. I'm going to go ahead and autofill that down, and we'll autofill it down to maybe like 640, I think is what I had over here. Autofill it down just until we run out of room, let's say. And that brings us down to 640. So we got the 200 to 640. So let's see what the impact on the payments would be if we keep everything else constant. 5% rate, and the 360 payments, 30-year, but we changed then the home value. That means the loan, if the down payment is 20%, the loan is going to be 80% of, in this case, the $200,000. Let's do our payment calculation. I'm going to say negative instead of equals to make it a positive number, and then say PMT. There's our payment calculation. Double click it on the payment calculation. The rate, we're going to keep the rate fixed. It's going to come from our data up top. That's the yearly rate, so we're going to have to divide it by 12. It's also coming from the data, therefore we need to make it absolute by selecting F4 on the keyboard, $ before the B and the 7. You only need a mixed reference, but absolute works. Divide it then by 12, because that's the yearly rate. We need the monthly rate. Comma to get to the second argument, which is the number of periods. That's also going to be constant. 30-year loan times 12. You could do it that way, or just the 360, which we've already calculated. That's coming from our data set. We don't want it to move down as we copy down. Therefore, absolute reference, F4 on the keyboard, $ before the B and the 6. Next argument, comma. This is the thing that's going to change. Present value. The present value is the loan amount, and what we have on the left-hand side is the home purchase amount. The loan amount is going to be 80% of the loan purchase amount. Now, I'd like to do this with formulas, with data references, as opposed to just typing in 80%. So we'll do it this way. I'm going to say it's going to be the 200,000 times, and then you could say 80%, or you could say brackets 1 minus 20%, which would give you 80%. Or I like to say brackets 1 minus this 20% up top. Therefore, if I change the 20%, it should change these cells as well. Now that 20% is outside of our table, so we're going to make that an absolute reference, F4 on the keyboard, $ before the B and the 2, close it up, shift 9. Now I needed brackets around that, by the way, because of, the order of operations. I got to subtract. If I don't do that, it'll multiply before it subtracts. So I took this A15 minus, and then brackets 1 minus that 20% cell up there, which will be 80%. Okay, so that's going to be it. I think that'll do it. Let's say enter. It's going to close it up. I didn't put that final closing on it because I had that little funky, little different bracket thing here. And we're going to say, yeah, close it up for us, please. And so there it goes, and it does it for us. Let's copy it down and see if it copies down properly. I'm just going to go one cell down first and just double check it. If I double click on it and say, what did that do? If I go here and say the rate 5% divided by 12 looks good. The number of periods is going to be the 360. That looks right. And then this is that weird one. It's going to be the 220 times 1 minus that 20%. Looks good. It looks good. Let's copy it down, putting our cursor on it, double clicking on the fill handle, copying it all down. So there we have it. So now we can do this nice side-by-side comparison, which is a little bit easier than changing the data up top. Because if I keep on changing the data up top here, if I was to change this to 200,000, for example, then you could see that our whole amortization table would change, and we got to change in the payment. But if I want to then go to 220,000, I lose the first amount, and then I could see the change here. Whereas if you do it this way, you could see it kind of side by side. You could see those side by side changes, and it's a little bit easier to look at. So that's the first thing we would typically do. And then we might want to see some more in-depth changes in terms of the amortization table and the interest per year and so on and so forth. So let's go ahead and make this blue first before we get into any more detail. I'll make this blue. Do our formatting thing here. Fonts group. Let's put the borders around it. Let's hit the bucket. Let's go down to more. If you don't have that blue, it's right there. There's the blue we use. And there it is. That's that. Then I'm going to make this home thing a fancy drop down like we did with the rate down here. So it's going to pull from that range of data just to be fancy. So we like to be fancy-pantsy, even though I wear shorts, so I can't be too fancy-pantsy. But we're going to go over here, and this is going to be the data tab. We're going to go to the data tools. We're going to hit this one, this item, and not the drop down, but the actual icon. And then let's make this drop down here. We're going to make that a list. Just select the list, and then we just select the range right here. That's a range thing. And then we just go down here to the range, to the home costs items to get our drop down. Drop it down. Okay, so there we go. If we go back up top, we should have our drop down there. So there it is. So that's super duper fancy. Let's bring it back to the 440 just for our, that was our starting point for some reason. We'll put it back there. So there we have. That gives us the payment of the 1889.61. That should match our 441.1890 because I don't have pennies here. So if I added the pennies, right, it's 18869. So I'll take the pennies off just to clean it up. Okay, so now let's do our other analysis over here. Let's make our pivot table on it and see if we can see the impact on a year-by-year basis of this change. So I'm going to add the pivot table. I'm just practicing adding the pivot table each time because the pivot tables can be a little bit tricky. They can get kind of messed up. So it's useful to be able to recreate the pivot table. So I'm going to put my cursor in the data. We're going to go to the Insert tab, Tables, add the pivot table. Well, I want to put this in the same data range. I'm going to go to the existing worksheet over here. I'm going to put it in cell K1. You got to be all the way up the top in row 1 here to apply the pivot table. I'm going to say OK. There's our table information. I'm going to put it together quite quickly, and we've seen this in the past. So if you want some more detail on it, you can take a look at the prior presentations. I'm going to add the year, which it tries to put in the values, but I want to drag it over to the rows because it's not a value, even though there's numbers in it. We want it to be the rows. And then we're going to just pick the payment, the interest, the loan reduction, and the loan balance. There it is. Table made. And then we're going to go down here and just do some formatting, selecting the drop down. We're going to say value, the field settings, number formatting. Let's make that a count like currency. I like currency. Brackets, but with the no dollar sign, and get rid of the pennies. That's how we like to see it. Okay, okay. Let's do it again. Next one. Value the field. Format the cells. Currency. Brackets. No dollar sign. Pennies. Gone. Okay, okay. Two more times. Value fields. We want to say number formatting. Currency. Brackets, dollar sign, gone, pennies, removed, okay, okay. Last one's a little bit different, you'll recall. Dropped up, drop down that went up, the drop down went up. And then this is going to be the min, not the sum. The min, not the sum for the balance. Number, currency, brackets, dollar sign, gone, decimals, removed, okay, dokay. And then we'll go ahead and do some formatting over here. A little bit of formatting. Let's hit the headers, home tab. Let's make this black and white as is our custom. Let's go ahead and wrap the text. Let's go ahead and center it. And then let's take this entire thing and put some brackets around it by going to the home tab, font group, borders. Let's put some borders around it, all borders. And then let's make this whole thing boldened and boldened it. There we go. And then maybe this one needs to be centered. Centering that one. And then I'm going to select all the columns here, make them a little bit smaller so that we can see them, squish them up a little bit so we can see them better when we're going back and forth with our analysis. So there we have it. So now that we have our data table, this one can change. We could change this on a year-by-year setting now. We got a year-by-year setting, so we could see basically the breakout of the payments as the home prices change, what the change in the payment will be, assuming a 20% deposit. We can see the change to the amortization schedule as we change the drop-downs up top. And then we could see our changes over here on a year-by-year basis. Now let's do the same kind of thing we saw with the interest rate. We might want to have another variant breakout where I might want to say, okay, if I hold the percentage rate constant, then what would be the change with different home values with regards to the interest payments on a year-by-year basis, for example. So let's say, for example, let's just build the table first. I'll build the table over here. One thing at a time. We're going to build the table from scratch, make this a little bit smaller. And we're just going to say this is going to be, I'm going to call it 5%. It's going to be held constant. And then the interest payments. I want to focus in on what the interest payments will be. Years. It's going to be a header. And then we're going to say based on a home value that's $360,000, a home value that's $400,000, and $440,000, assuming a 20% deposit. So that's going to be our headers. I'm going to align this into the center, but not by merging the cells, because I don't like doing that. Instead, I'm going to right click on it. We're going to format the cells, alignment. We're going to hit the drop down and say center across. Way better way of doing it. Way better. Doesn't mess anything else up quite so much as merging things. Then we go to the home tab, font group. We're going to make it black and white. Let's go ahead and center this thing. Let's make this one black and white too. And then we'll make this one a little bit larger. Let's make this one larger. Like so. So there we have it. And then the years are going to be, let's say, 1, 2. Copy that down. 30 periods. Bringing it on down to 30. I'm not going to 360. I started to go too far because I thought it was going to be this huge thing, but no. Center that thing. And then I'm going to make another one over here, and we'll focus in on the percent, 5%. We're going to hold that constant. Loan balance. So now we're going to be looking at the loan balance and what it will do over time, over the 30 years on a year-by-year basis. What will be the ending balance? I'm going to say this equals the year. This equals the 360. I can copy that across because these headers are going to be the same. And then we could use our trusty format painter, selecting these items, home tab, clipboard, format paint it, and just paint it with the paintbrush like that. And then we're going to say 1, 2, do our copy that down, 30 periods once again, down to 30 periods. And then we could just center that, alignment and center. So now I'm going to be changing this and see if we could pull in this added data. So I could say, okay, well, what if we had the 360 over here on the home purchase, 360, drop down 360, 20% of that means 75 down. That means the loan's going to be $288,000 based on this information. Then we can say, okay, well, let's change my table over here, right click and refresh. So there's our information, and here's going to be the interest on a period by period basis. We'll pick up the interest, copy that, pull that over here. That's going to be my interest, right click and paste it. And then we've got the balance, selecting the balance. Let's copy those on down, right click and copy. And bring that over to the 360, right click and paste that on a 1, 2, 3. Okay, and then we're going to change it to 400,000. Say, okay, what if I change this to a home purchase of 400,000? Drop down, fancy, pantsy, drop down, 80,000 down, 20%. That means loan 320, payment 1,717, which should match what we have down here. 1718 without the pennies, rounded. Looks good. Let's go ahead and refresh our table here. Right click, refreshing it. There it goes. Copying the interest. Let's go ahead and copy the interest column. Say picking up the interest, right click, copy, or I hit Control C. Right click, paste it, just the values only. We could pick up the loan balances. Copying the loan balances, right click and copy, putting that on over to the right hand side, pasting it 1, 2, 3. Let's do one more on the 440. Say, what if we did the 440 then over here? So what would happen then? So we'll change the home purchase to 440, 20% of that, 88,000, loan balance 440 minus the 88, 352, payments 1889 on the payment, which should match what we have down here, 441,890, rounding involved. Looks good. Right-clicking our amortization table and refreshing it. We got our new data, picking up our interest amounts right here, copying the interest amounts, We'll put that on over in our table in the 440, right click, pasting it 1, 2, 3, and then the loan balance amounts. Let's do it to the loan balance amounts here. Control C this time. Putting that in the 440, right click, pasting it 1, 2, 3. Let's do some fancy formatting here. Put our blue stuff in here. Selecting these items. We're going to go Home tab. We're going to go Paint Bucket Blue. Put the brackets around it. We could sum it up down here with the total. Total equals SUM, Shift 9, up arrow, holding down Shift, going up to the summit of the sum column so that we could sum it, enter, and then we're going to go and basically just copy that fill handle across, like so, and then we're going to go to the font group and border that, put the brackets around it. We don't need the totals here. It doesn't make any sense on this side, so we'll just do the bluify over here, bluify it, blue, borders, and there we have it. So there it goes. So notice this table over here, again, we can get a lot more detail now looking at, well, what will be the difference on the interest that I'd be paying yearly, which again, you can kind of think that it could be something useful for calculating things like your projections into the future, what your tax impact would be, and if you plan on selling the home at some point in time and trying to figure out what your profits could be at any point in time, then it would be useful to know what your loan balance would be in different basically scenarios. So we could hold something constant and then pull out some more information with the help and use of the amortization table. A whole lot more things we can do, just some ideas that you could put together whatever your personal needs are as we focus in on each of the individual components that could be changing and what the impact would be on the whole process here.